I can tell you one thing. Technology is the single most important aspect of every business that has successfully scaled.
It's time for that Real Estate Tech Guide. It's your weekly chance to explore how technology can help your real estate business explode. Each week, you'll hear from real estate investors who have been there and done that and find out their favorite technology tips. Listen in as Jordan speaks with tech companies and learns about new technologies and new ideas that will help you scale your business. And now, join your host, Jordan Samuel Fleming, CEO of Smartphone, for this week's episode.
Hey everybody, it's Jordan Fleming here with another That Real Estate Tech Guy podcast. And I am delighted to have another technology podcast and welcome Eli from Audantic as my co-pilot for the episode. Eli, welcome to the podcast. Why don't you give a little bit of an intro to yourself and to the company?
Yeah, absolutely. So I'm the Chief Sales Officer for Audantic. We're a data science company. The problem that we solve in the industry right now is we help our clients really hone in on who has the highest likelihood to sell off market at a deep discount. And by that, we are able to really efficiently help people's marketing focus on the best class of target in the marketing, as opposed to, we hear it every day, people are like, yeah, I'm marketing all these people, they check all the boxes on the surface, and yet they're never going to sell to me. So that's really the problem that we solve here.
Absolutely. And there's nothing, I couldn't wait to have you on the podcast because as a former marketing guy, like back in the day before I started Smartphone and before I built CRMs, I was in marketing. And there's nothing I hate more than the spray and pray mentality of just buy a big ass thing, Liz, and throw it at the wall and hope something sticks versus the targeted approach that's going to mean that you maximize what you spend and you maximize your time. And that's why I'm delighted. Let's dive into a bit more about the different, about why your approach is better, because I can't wait for people to hear it.
Yeah, I think, one of the easiest ways that I always explain to people what it is we do without getting overly technical, I just ask people, have you seen the movie Moneyball? And some people say, well, yeah, the Brad Pitt movie. I'm like, yeah, Billy Beane and the A's. What did Billy do? Billy just basically used math or statistical regression analysis to really optimize which player should go in what spot. Or if you're maybe a fan of Ray Dalio and the work that he's done at Wall Street and Bridgewater Capital, Ray really distinguished himself in the early 80s by doing regression analysis. And that's how Ray was able to effectively beat the market. Well, we're no different. We take regression analysis and we apply it to the real estate market. And it offers a couple real fundamental differences than the conventional approach. So every day I talk with investors across the country, large, small investors, and I hear the same frustrations because everybody has access to pretty much the same data. And so if everybody has access to the same data, well, how do you, delineate what a good target versus a bad target is? And for the longest time, people would deploy what is known as a stacking approach. And so typically what I will see people do is they'll buy an equity list and they'll stack it against a non-owner occupied list. And maybe they'll put in some zip code exclusions. If you want to get fancy, maybe you're putting like an age barrier of 65 and up. And the thing is, it works. But the downside of that is you also spend a lot of money marketing to people that checked all the boxes on the surface that are never going to sell to an investor. And the reason that happens is because in a stacking approach, you assume all things are equal. Now, we talk to real life operators here, and they're saying like, well, I have a set of 20,000 people. Target 5,000 is an awesome target. Target 10,000 is absolute trash. But in a stacking approach, you treat it all equal. And so it's very, very problematic. And so what we do is we look at every single real estate transaction in the market. We monitor that daily. We ingest that daily, and we feed it to an algorithm. And really what the algorithm does is it says, okay, in a given market, these are all the transactions that occurred. Here's all the properties that sold conventional. Here's all the ones that sold distressed to an investor. What type of person and product sells to an investor? But then you have to go a lot deeper than that because not all investors are the same. If you're a fix and flip guy, you probably need CapEx in the product. That's fundamentally different than how a hedge fund or an iBuyer that acquisitions at 98 cents and up on the dollar will view a product in a transaction. And so there's a real important part of the nuance there. Yes, they're both investors, but they're playing fundamentally different games. And so the algorithm really decides and looks at it based on data. These are the people that are most likely to sell off market at a deep discount to a wholesaler or a fix and flip guy as opposed to a fund. And then we give that data to our clients for their marketing purposes.
Fantastic. And I mean, you know, if you're my view of it is, you know, there are a couple things that are going to really help you be successful. One is that you have a robust system to deal with the leads that you've got on, right? That you're working things properly, that you're doing the right follow-ups, you're tracking the communications, you're getting the steps and all that. That's absolutely critical. But if you can stack the deck with the good data to start it, then those two things combine, you know, great data and a robust system that you can work that data through, you're setting yourself so much further ahead than that kind of, let me just get some cheap data and start throwing shit at the wall, so to speak. I mean,
yeah,
you're putting yourself a mile ahead of the race without even doing anything. And that has an impact on everything, your success, your return, and the amount of money you're investing. As you pointed out, how much, if you're going to invest in marketing to 80,000 people, or because you just bought a big ass list and you're going to try and pray, or you're going to target that marketing down to 8,000 people and really go run the table. And that's a conversation that if you're not having with yourself, you really should. so
yeah.
that's phenomenal.
Yeah, I think, you know, it's really it's two sides, right? You know, you have to have best in class data, but best in class data is only so good. It's really incumbent upon the operator. You have to have great systems and processes, because if you don't, you can have the best data in the world and it's not going to make a difference. I mean, I tell people, look, it's the equivalent of giving me the keys to an F1 car. Yeah, it's cool, but I didn't go to race school. So kind of what's the point? And I think there's a lot of similarities there. One of the things that I think is really exciting as we see technology come in and start to influence the industry is how can we become more efficient in our operations? Because you look at any market as it progresses over time, and efficiency is always at the forefront. And one of the things that we do to really help our operators understand and become better at what they do is we're the only people in the industry that publish attribution. Now, as a marketing guy, I know you can appreciate this. So what I mean for that, for those of you that aren't familiar with attribution, is we generate a data set and we say, hey, these are the people that are most likely to sell off market at a deep discount in your market. After one quarter, we publish those results to an online portal that says, okay, we predicted these 3,000 transactions would occur in your market. How many of them did you get? And what it allows the client to do is really understand the relationship of conversion to their revenue funnel. Because all of a sudden, people will say, okay, well, nobody called me this month. It's like, well, sounds like you have a marketing conversion problem as opposed to a data problem, because this product traded in the market, it just didn't trade to you. But it also allows them to understand the downstream relationship of, okay, we talked to this many people, but we didn't win the deal. It went to this competitor, and it gives them the ability to ask why. Okay, did my competitor pay more, or was it a follow-up issue? Did the acquisition guy just not follow the process, or maybe the process itself is flawed from a follow-up standpoint? And that, I think, is really kind of the future of where this industry is going, is how do we leverage data and analytics to get better at what we do?
I couldn't agree more. And it's funny, I had a conversation, I had a podcast conversation, go figure, just the other day, and with one of the CRM companies, and we were talking about, you know, how much we wished more people would not just track the ultimate cash they made from each lead source, or, you know, from a data set they've got, but also track the steps, you know, because yeah, of course the money's important. And if you're making money and you're making profit, you're a happy guy. But if the market tightens or the economy turns, efficiency becomes more important. When money's flowing and nobody cares about what they're spending on, right? They're pushing it out because the money's flowing around, fine. But if everything tightens, efficiency of working those leads is important. And if you know that, man, this lead list is giving me this result, but it's costing me this effort versus this one, you can make much better decisions. And people are starting to move that way. I think I agree with you 100% on that.
Yeah, one of the things that's that happens is we're talking about operations. At the end of the day, operations wins, but operations is not sexy. I talk to people every day and they're like, well, I want more deals. And they equate that with more data, more leads. But really what they're failing to understand is, okay, well, what about all the stuff you get in front of right now? What happens if you just improve conversion on that? See, that's a better question to ask, because if you spend more money buying more data, it doesn't necessarily mean more leads. Okay, you're literally spending you're spending more money to accomplish the same thing, which is just compounding the inefficiencies, and it's not a sustainable system. And so what happens when we look at, when clients, we start working with them, I ask them a couple of basic questions. Say, okay, this last, say 90 days, how many people did you market to that sold to a competitor that never contacted you? And nobody knows the answer to that question, because all they do is they just look at, okay, well, this came into my funnel. This is what I converted on. But that's called house conversion, okay? And that's a flawed metric, because what really matters is what happened in the marketplace. It'd be like if you and I are stockbrokers, and let's just say this last month, we got 10% return. Feeling good about ourselves, right? Meanwhile, without knowing it, the market went up 30%.
The market's got up.
All of a sudden, we didn't do so hot.
Yeah.
And so I just let people know, look, ignorance is bliss unless it's your money. This is why we need to pay attention to this. And if you start to understand your relationship of conversion towards the total market of all the stuff you've touched, but you're failing to convert on, then you can take the steps to become better and improving conversion on both marketing and then on acquisition. Because if you just make a 1% improvement in conversion at the top of your marketing funnel, what is the downstream effect of that? We talk hundreds of thousands of dollars, potentially millions of dollars, depending on the size of your operation.
Absolutely. Absolutely. So let me ask you, let me bring this kind of back a step, because I love it. I love all of this, and I think it's enormously valuable. But I also know that I view the real estate investment market as a game of a couple different sides. And, everybody's got an investor journey. Some people are at the start of the journey, and some people are at the more mature end of their journey, and they've got operations that they are building and scaling into a genuine, business that's an asset that is going to be worth a decent amount of money. But there are a lot of people who start out. So, in your opinion, and again, this is just opinion, but what is there a level they should get to before they start looking in your direction? Or can they come relatively, if they're serious about their business and they want to really, is this something that someone who is relatively new but has got a hunger to do it right can bring on board?
Yeah, so right now we service the top 1% of investors in the country. Now, that being said, for that individual that you're talking about that is dialed in and they're focused on success, I'm going to present a different dynamic to that individual. So one of the things that happens when an investor starts out, they'll typically buy niche lists, whether it's your code bios, BK, probate, you name it, right? And that stuff's great. But the one thing being is, at the end of the day, we want to buy low, sell high, right? And so one of the things when people start off that gets overlooked oftentimes is, who is the end user of this product that I'm going to unload to, right? And there's usually not a cohesive focus on establishing robust buyers out of the gate. And I think that's fundamentally flawed. And the reason I say that is, people get hung up on, I have to get this at a deep discount. Well, there's only so many deep discount deals that are available in the marketplace. But what if you have buyers that will pay you more? If you look at the largest wholesalers in the country, they operate different. Why do they operate different? Because their focus is on buyers. Because if you can only pay 60 cents on the dollar and I can pay 80 cents or 90 cents on the dollar because I have better buyers, I win all day long. So where I'm going with this is that we have a platform, it's called Buyer Sonar. And what it does is it shows all of the investor transactions in any MSA in the country. We show you who is buying, who's paying a premium. And so what I would challenge that person just starting out, yes, you have to get the deal, but your life will become so much easier if you already have a better class of buyer, because then that empowers you instead of fighting it out with all these other people worrying about, man, I got to get this at 50 cents on the dollar, 65 cents, whatever. I could come in and I can offer 80, maybe I offer 85 because I have a better class of buyer. And our platform allows people to do that. So I think if you want to build a sustainable machine that continues going on, there needs to be a heavy emphasis on buyers right out of the gate.
I think that's a really interesting insight because I'm not an investor, but having been building CRMs for them for years, and then now working with so many investors in smartphone, I see a lot of them. And one thing I have noticed, is that there are an awful lot of people whose buyer lists are almost, it's like, I'm just going to put anybody in here and I'm going to spray out and pray. And it's exact same spray and pray that they're doing at the buy a cheap list and just, get someone to keep calling. It's the same on the other end. And I don't think they ever reach that conclusion that you just reached, which is, man, if you've got better buyers, then you don't have to worry nearly as much about this side of things. If you know who your buyers are and what they're interested in, you can be strategic in how you look at deals and what you're putting in front of the right people. And that will allow you to get that premium, which, as you say, if I can pay top more than you can, then I'm winning. I'm going to win those deals.
And so here's the data case behind that. Because we're a data company, we see every transaction, every investor in the country. And I can literally go into almost any MSA in the country. And it's interesting. You plot the transactions of who buys the most and who pays the highest, right? And it's always a U-shaped graph, okay? So on the left-hand side here, you have people that have done 1 to 2 investor transactions. One of our clients affectionately named them the HGTV buyer, okay? This is an individual that on a rolling 16-month basis has typically done 1 to 2 transactions. They don't put it in an LLC because they don't know any better. And they typically pay 90 cents and up on the dollar. Now, on the other end of the spectrum are your funds, your iBuyers, your prop tech companies. And in the middle, that bottom of the U, that is where established investors are at. So if you think about it from a market standpoint, where does the opportunity lie? Well, because we're in a contracting economy, the funds, the iBuyers, that is not a viable exit path for most wholesalers anymore. But here's the thing. Those onesie twosies, those HGTV buyers, they have not slowed down. 3 weeks ago, there was an article in the Wall Street Journal talking about, they call them laptop landlords. These are people that are looking to buy properties. And why do they want to do that? Well, there's a fundamental distrust of the stock market. So they want to put their money into something that is a tangible hard asset. Now, the great irony in that is, guess what Wall Street's doing? They're buying up as much single family properties as possible. So where does the opportunity lie? Well, if these people on the far end of the spectrum, your HGTV buyers, have not slowed down, they continue to pay the premium, then it becomes incumbent on the operator to target those individuals. And that is how you will make a lot of money, but also afford yourself the flexibility of not having to worry about, I got to get this at 45 cents on the dollar.
Yeah, I think that is a mindset that is going, I don't think everybody's there yet at all, but I think is really good insight for how, particularly as you say, if we are, in a state, if we are going through a contraction, you've got to be smart about these things. And you've got to adjust how you do things to play the game you can win, right? If you're only ever going to keep just playing the same game over and over and over and over again without paying attention to the variables that happen in life, you're going to find yourself swinging when there's no ball coming anywhere near you. And I think that is a really interesting insight. It's funny, I had Paul over at Town Square.
I do.
Paul over there. I was talking to him the other day, and we were talking just about the this concept of valuing buyers and how much that is a critical part of a successful business growth for whether you're wholesaling, whatever you're doing. And I think you're backing it up right there.
Yeah, without a doubt. And one of the things, when we talk about companies that are helping to move the ball forward with respect to technology, selfishly, I placed us in that category, but I really respect Paul and the guys at Town Square, because one of the things that they've done is they've built a platform that is very focused on data integrity and security. They do not share people's data, and that's really, really important, and it becomes even more important moving forward. But because I would say this industry hasn't historically focused on data and tech, I'd say it's lagging behind what we see from a lot of stuff coming out of the Valley. There hasn't been that focus. And if I was to say a group that is doing it right, I would definitely point to them. And I think you can relate as well, because you built a tech company here. You deal with a large amount of data. And I would almost challenge you. I mean, maybe you could share with the audience some of your thoughts on that, because that is something that gets overlooked. We look at it because there's a right way to do it from, data and privacy laws. But again, it's one of those things that I think oftentimes goes overlooked that can be very, very critical.
Absolutely. And, as a final bit, I will say Paul from Town Square isn't on an episode. He has been on this podcast, and I definitely recommend people listen to it. I think it dovetails really nicely with you, actually, because you're both saying really smart thing about buyers. I mean, data, I would go further. For me personally, as a smartphone owner, as a guy who runs smartphone, data is, of course, data integrity is maximal. Our CTO focuses on that, more than he does eating, I suggest most times. The other part from our perspective is also making sure that we are promoting best practice in terms of behavior. That for our point of view, because and behavior is of course in terms of getting your most success, but it's also legal, right? There's the FCC ain't subtle about what they do, and there are a lot of rules and regulations around cold calling, cold doing this, consent, and do not calls. And so a lot of our thinking as a platform is around data integrity, security, and compliance, and making sure that we are always promoting best practice, which historically in our industry is not always necessary. I'm not going to name any names, but I would say that not always been at the top of everybody's list. And it is starting to become, I can tell you, and I will definitely not name this, but you're probably familiar that in the phone industry, the text messaging, they've got new rules around text messaging in the US called A2P 10DLC. And we've started to see people's text messages being shut off if they're not being compliant. So these things come in and the hammer comes down.
Absolutely.
As it should, because they're there to promote best practice and ensure that when you do reach someone, they're not sick of talking to people because there's a bunch of cowboys blasting them at 3 a.m, and just going all over the place, which is what that landscape was about for quite a while.
I mean, the shining light and all that, though, is it's really a forcing function, because it forces people to up their game. And then the people that are unable to do that, they get weeded out. So, like I kind of started our conversation with, all markets become efficient over time. And this is just one of the steps in how this market is becoming more efficient, in this case with technology.
Absolutely. Listen, I'm going to take you through the fast 5 questions that I get to everybody who comes on the podcast. I've got fast 5 questions. I'm going to fire them at you, and you can give me, off the cuff best answers you can. I think I can guess some of the answers, but I'm putting in your spot now. So question number 1: what feature of your system do you think has the biggest impact on your customer's business? If you could narrow it down to 1.
Right now, in this marketplace, buyers. We allow them to see who's going to pay the most.
Awesome. Question number 2: what is the biggest mistake people make within your technology area, i.e. data and data processing? I'm going to guess I know that answer too, but I'll let you answer it.
They don't take the time to actually look at the results.
Which I would guess would dovetail into question 3, which is your best advice on someone new to the real estate investing business, how to get involved in, the sort of data and data analysis.
Yeah. From the very beginning, start to look at your conversion and understand why marketing isn't working or why acquisition you're losing that deal. And we can help people with that.
Is there one thing across all the Audantic product suites you've got that you wish everyone knew about Audantic?
Yeah, I would just say our predictive data. There's a better way to target people, and it would help people just not waste the amount of money that they're doing buying lists from all these other aggregators and just doing the same thing as everyone else.
Awesome. And the final question of the Fast 5: if someone was just starting out, I am Joe Bloggs, just getting into my real estate investing game. If there were 3 bits of technology you would recommend that they bring on first to help them get started, what would they be?
Yeah, you're going to need a calling platform, dialing platform, texting platform. Number 1, invest in a decent CRM, and then find a tool, whether it's ours or whatever, that helps you identify buyers.
I will take that. Absolutely. Eli, it's been an absolute phenomenal conversation. I'm loving the insights, and I'm hoping, I was planning on doing a group podcast at some point around data, around maybe even buyers, and maybe we can do a group podcast with Paul from Down Square, yourself, where we can talk more about those issues. I think it'll really help. And I think it'll be nice to get kind of a group discussion going, if you'd be up to that at some point. And I'll give you the final word. Tell people, how they can find you, how they can start getting engaged with you.
Yeah, it's really simple. If you just go to audantic.com, just visit the site, you can submit your info there. I'm always available to help people out. Same with our AEs. If you want to email me directly, it's very simple. It's just Eli, E-L-I, @audantic.com.
Absolutely. Well, thanks everybody for listening. Do me a favor and do the whole subscribe, review thing. What every podcast person says in their episode. It really does help to make sure more people see it. And please do go ahead and head over to thatrealestatetechguy.com, where you can find out more information on Audantic, and you've got links to contact Eli right there. And thank you everybody for listening, and have a great week.
Thanks for listening to another amazing episode of That Real Estate Tech Guy. Head over to thatrealestatetechguy.com to check out all episodes and get special discounts on tons of awesome real estate technology platforms.